Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Monday, the 8th day of December 2014, and this is the daily report for gold and silver. Nice showing in the precious metals market, with gold currently trading up about 1% on the day, about $11 higher, 1204.23. That's our current print. That's off of a low of 1191.50 and a high of 1210.70. Silver also trading higher, but nominally so, up about 0.5% on the day, 1634. That's off of a low of 1613, a high of 1654. More on silver towards the end of the show. And also for those that do want to take advantage of the loyalty program, only available till the end of December, January 1st, actually, I will give you information at the end of the show as to how you enroll. And now for today's report. We do have the markets trading higher on the day. We're looking at a very short-term chart, 230 minutes, standard candlestick format. On a purely technical basis, and we'll talk about some of the fundamentals in a second, meaning lower equity market, lower dollar. But just strictly on the fundamentals, we take a look at this most recent low, mid-November, market trades to a low of 1131. It comes up and makes a high. It is not a higher high than the previous high. It would have to take out 54, but it comes up, makes this high, and then as it trades back lower, it does make a higher low when we compare 31 to 41, obviously. Now, as the market comes up, it does make a higher high, although ever so slightly, and I still believe we're in a congestion or sideways trading action, but it does make this high. As it comes down, if this low holds, we are now looking then at a higher low again. So in terms of a technical basis, sluggish as it may be, we do have this rally continuing. However, at the same time, we've really identified a couple of different areas of resistance. One, the 1207 area, that is a 38% retracement. You can see where it really acts as resistance right in this area. As it comes down, it breaks through resistance quite easily right here because we find a new set of highs, this high being at around 21, and that actually matches up to the 23% level at 1225. So in terms of our current resistance areas, we have resistance in two places. First place is 1207. You can see that the market has traded above there, but is now below. And if it can sustain that, there's no doubt real resistance right now is at about 1221. Now, in terms of basic support in the market, of recent, and these of course are short-term levels based on short-term charts, but we've got to look at support at around 1186. That is this 38% retracement. I've got two different retracement levels. The shorter one, all on the right-hand side in terms of the numbers here, and our longer one, which begins at 1254 down to 31, that's on this side. And in fact, let's go ahead and kind of compress that up a little bit so you can see all the numbers in there. So you can see where this one begins at 1254. This one begins at 1221. Both of them terminate at 1131. Now, when we look at it, the other thing that we really try to look for is some sort of harmonics. And a harmonics is simply where we would get a band of activity. In other words, we would have a 76 and a 61 really on the same line at 1160. They are not lining up in that way, and that tells me that we're not seeing our normal geometric progression, which tells me that we do still have a thinly traded market. Nonetheless, we do have the market trading up about a 10, 11, maybe even $12 if it gets to about 1206, with our lows right in here at about 91, I believe, 1191 on the low side. Now, as we have mentioned many times, there has been a general negative correlation between equities, dollar, and gold. And we saw a break from that last week for some time as we saw the equities markets riding higher and gold riding higher. In other words, they were both running in tandem. It looks as though we're back to that standard negative correlation. S&Ps are down. They're down off of that record high that they hit on Friday, 2059.50. And on this, we're looking at a weekly chart. You can see that red candle as it comes in. Now, you can also see this low here, and the best way to do that is to really take a look at a shorter term chart in the S&P. And to illustrate that point, I've pulled up a hourly Standard & Poor's. This is the E-mini 500, but I've also added one fib retracement just so we could gauge the sell-off that we're looking at today. And you can see this on an hourly chart. Market comes down, you've got 2 tremendous hours of really volatile downside trading. Market opens, trades to a new low. This low, call it 2054 on the low side, and since then has absolutely kind of swung up off the lows and is moving back up, now trading just above the 61% retracement level. And this is, again, fairly short term, but on a 60-minute chart, but 2060 being that 61% retracement level, and it just came just below a 76% retracement. Of course, a break below that would really signal a downtrend, meaning if the market would break below, call it 2046. Also, once again, we see some downside pressure in the US dollar, the composite index. We hit this high on Friday. We actually compressed the chart to show that where that high fell in relationship to previous highs. We had to go back, I believe, to 2010 before we found a time in which it traded to this level. But you can see that it broke to about 89.50. We had what's called, in terms of a candlestick pattern, on our daily chart, first we get tweezer tops. Tweezer tops are simply where you have equal highs in the market, and you have either an incomplete or a complete dark cloud cover. A dark cloud cover is simply defined as after a defined uptrend, certainly meets criteria there. The market opens at or above the close of the day, meaning the top of this body here, and then trades at or below the midpoint. And I would think it's just slightly above the midpoint by eye to about at the midpoint. We'd have to see where it closes. That would give it an incomplete dark cloud cover. Of course, to take that particular call in terms of candlestick pattern, you would have to see the following day be a red candle with a lower low and a lower high. It would look something like this, just in terms of an illustration. In other words, you would complete that. And if you notice, you get that three river evening, star variation when you do complete this particular pattern. So it is something that we want to look at. The real question is was the rally that we saw in gold when it hit this 1131, was that really the bottom of the market? Because as we talked about last week, when we look at a historical perspective, and let's go pull up a longer term gold chart. One of the things that we talked about on Friday and a little bit towards the last couple of weeks is the fact that if you had bought in January, the beginning of the year, here's 2009, 2010, 2011, 2012, 13, and of course his current year. But what we talked about was some of the, what I'll call the seasonal tendencies in gold. And I don't know that there's seasonal tendencies, but we have noticed that it typically hits a bottom just before or around the end of the year. Now, 2009, it hits this bottom just in October and November, so you get that here. When we take a look at 2010, you can see the market comes down ever so slightly, but forms a bottom roughly the first quarter of 2010. 2011, it really bottoms out. 2012, it really bottoms out. 2013, well, the market was in a straight destructive down path. This was the year we lost 30% in equity in gold. So that, of course, doesn't fit that model. And then last year, had you bought really at the beginning of the year, you would have profited. Now, the reason I bring that up is we're sitting at around 1204. I was looking to find some sort of potential bottom in the market roughly at the beginning of the year. And my real question is, have we now seen that bottom at 1131? On a shorter term basis, we still have to look at the fact that this market Yes, has been moving up, but has found definitive resistance areas, specifically the 1208, that it really hasn't been able to break above. A break above that, a break above 21, really signals that potential. And of course, 1254 being the most recent top, that would be the real area that we would look at. So what about silver? Well, we're certainly well off of these lows at 14. And the real significance that I find is that when we take a look historically in terms of silver pricing, we're looking at a weekly chart. We've really got to go back to the beginning of 2010 to find the last time silver touched at around the $14 mark, and that's here and then again here. Now, from there, the market did trade higher. It formed a base at 18, and then from there, that's when we saw this dramatic rise, of course, as we saw the second occurrence in silver actually hitting $50. That was to be short-lived at best. But the fact that we've hit this bottom now, tested the bottom, and traded $2 off of these lows, that to me I find interesting, and I'm now beginning to take a serious look at silver. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Tuesday for another daily update and review. For those who are interested in enrolling in the loyalty program, here's information on how you can accomplish just that. Bye-bye. First off, I want to thank all of our subscribers for the loyalty that you have shown us over this last year. Starting last year, I started a program called the Loyalty Program. Now, the Loyalty Program, I am going to repeat it, is only available for 1 month from now until January 1st, and it will allow you to get our best pricing ever at a maximum of about $83 a month. Now, all of you who are viewing this video are actually eligible for this particular service. And the way that you would enroll, from the top, you've got these options. Go ahead and press My Account. And then once you're at your account, press Add Renew Subscriptions. And as long as you're an active member, and by viewing this video you are, you're going to get a couple of new choices. The first choice allows you an annual membership, $999 per year. It comes out to about $83 per month. It is billed annually. You would click that, and we have added a new one for those existing loyalty members, or for those who choose to. You can now get a lifetime membership, $2,999, $29.99, and this will allow you to have an account really that never expires. Now, with the loyalty member gold, of course, you're grandfathered in. Your fee will never change. It will never go up. And to enroll in this, simply click on the option that you choose. And then once you do that, click Next. When you click Next, you'll get a screen similar to this, which will allow you, without a PayPal account, to simply use your credit card and go in and enroll for the loyalty program. We will be sending out a special notification, but prior to doing that, I wanted those who watch our daily video the opportunity to get this first. Again, this option will only be available till January 1st. For those of you who have been with me for a while and are looking to stay, this is really the best, most cost-effective way to get the gold forecast every day. As I said, at minimum, it runs $83 per month. And of course, the lifetime, it's going to be much less as the years go on. Again, thank you for your support.